Picture this: your phone buzzes with notifications, not bills or debt collectors, but dividend payments hitting your account every month. Now, meet Donald. He's 26, burned out from long hours at an accounting firm and drowning in financial stress. After years of sacrifice, he's scraped together $20,000. It's everything he has, and everything he's about to risk. The pressure is crushing him. Credit card bills pile up faster than his paychecks can cover them. His rent just jumped 15% last month, swallowing what little breathing room he had left. His so-called emergency fund has been depleted by one crisis after another. Donald knows he needs to do something fast. He could play it safe, watch inflation slowly devour his savings, and stay trapped in the same cycle forever. Or he could take a calculated leap, investing his entire $20,000 into dividend-paying assets that could generate thousands in passive income annually. This breakdown reveals Donald's 7-strategy roadmap, from conservative 4% yields that sleep soundly at night to aggressive 30% plus powerhouses that could literally change his life. The final approach is so bold it might just fund that long-postponed trip to Switzerland he's been dreaming about. If you're tired of working harder just to stay in the same place, Donald's journey starts now. Part 1. Dividend-paying stocks, Donald's safety net. Donald stares at his laptop screen, his hands trembling slightly. This is it, his first move. He's not gambling, he's building a foundation. Strategy 1 is about survival, not thrills. The safest play in Donald's arsenal? Rock-solid, large-cap dividend stocks. These aren't flashy startups or risky ventures. They're established giants that have been paying shareholders for decades. Companies so stable, so predictable, that they're practically guaranteed to keep the checks coming. Valley National Bancorp, VLY, is offering 4.79% right now. People's Bancorp, PEBO, is even better at 5.81%. These aren't lottery tickets, they're financial lifelines. Here's the math that makes Donald's heart race. If he puts his full $20,000 into People's Bancorp, he's looking at $1,162 per year in pure passive income. That's nearly $100 flowing into his account every single month just for owning the stock. It's not enough to solve all his problems, but it's a start. It's proof that his money can work for him, instead of sitting there, slowly losing value to inflation. The foundation is set. Now it's time to build. Part 2. Dividend Aristocrats. Donald's Elite Guard. Donald's confidence is building. The foundation is solid, but now he's eyeing something more prestigious. The Aristocrats. These aren't just any dividend-paying stocks. These are the elite. To earn this title, a company must raise its dividend for 25 consecutive years or more. Through recessions, market crashes, and economic chaos, they never missed a payment. They never cut a check. Donald's eyes lock onto Realty Income Corp, dubbed the monthly dividend company. At 5.62% yield, it's been paying shareholders every single month for over 50 years. Put $20,000 here, and Donald would collect $1,124 annually. That's $93 flowing in monthly, like clockwork. Then there's Amcor, AMCR, at 5.45%, and energy giant Chevron, CVX, at 4.45%. These companies have survived everything the market could throw at them and kept paying their shareholders through it all. The math is getting more attractive. The reliability is intoxicating. Donald realizes he's not just buying stocks. He's buying into a proven system. This isn't just investing. This is joining an exclusive club where the membership fee pays for itself. Part 3. Donald's Diversification. Donald's getting bolder. Individual stocks are great, but what if he could own dozens of dividend-paying companies with a single purchase? What if he could spread his risk while cranking up his returns? Enter dividend-focused ETFs, the power move that changes everything. The Invesco KBW Premium Yield Equity REIT ETF, KBWY, is staring back at him with a mind-blowing 9.81% yield. Donald does the math twice because he can't believe it. $20,000 invested here would generate $1,962 annually. That's $163 every single month, nearly doubling his previous returns. But KBWY isn't playing it safe. It's packed with high-yield REITs that could be volatile. For a steadier approach, there's SPYD at 4.40%, $880 annually, or the rock-solid SCHD at 3.75%, $750 per year. The beauty? Instead of betting everything on one company, Donald now owns slices of 50-plus dividend champions. If one cuts its payout, the others keep paying. It's like having a personal dividend army working 24/7. Donald's pulse quickens. With ETFs, he's not just diversified, he's weaponized his $20,000. The monthly payments are getting serious now. The game is changing, and Donald is just getting started. Part 4. Direct REITs. Donald's real estate empire. Donald's thinking bigger now. He has always dreamed of owning real estate, but with just $20,000 to his name, he can't afford it. That is where REITs come in. Real estate investment trusts are cash-generating machines. They own massive portfolios of income-producing properties, like shopping malls, apartments, office towers, warehouses, and by law, they must pay out 90% of their profits to shareholders. Realty Income Corp is calling his name again. At 5.62%, this monthly dividend powerhouse has been delivering consistent payments for over 5 decades. $20,000 here means $1,124 annually. $93 hitting his account every single month without fail. Donald's revelation hits hard. He's about to become a real estate mogul without buying a single property. No maintenance calls at 2 a.m. No dealing with problem tenants. No massive down payments. Just pure, clean rental income flowing directly into his bank account from some of the most valuable real estate in America. Part 5. High-yield dividend stocks. Donald's dangerous game. The safe plays were just the warm-up. Donald's confidence is surging, and now he's staring at numbers that make his heart pound. High-yield dividend stocks. The kind that offer returns so juicy they seem almost illegal. This is where things get real. Companies like Trinity Capital Inc., TRIN, and BWLP G Limited, BWLP, aren't your grandmother's blue chips. They're aggressive, volatile, and throwing off yields that dwarf everything Donald's seen so far. We're talking 8%, 9%, even double-digit returns. Saba Capital Income and Opportunities Fund, BRW, catches his attention. A fund that's not playing it safe. The math is intoxicating. $20,000 at an 8% yield means $1,600 annually. That's $133 every single month, nearly doubling his previous returns. But Donald's learning there's no free lunch on Wall Street. These stocks can cut dividends overnight. Share prices swing like roller coasters. Companies can implode without warning. The accountant in him screams caution. The desperate man drowning in debt whispers, "Do it!" Donald realizes he's crossed a line. He's no longer investing. He's gambling with his future. The question is, will he double down or pull back? Part 6. Extreme high yield plays. Donald's all or nothing gambit. Donald's standing at the edge of the cliff. Everything he's learned, every safe strategy he's considered, it all led to this moment. The final strategy isn't just risky, it's absolutely terrifying. Welcome to the world of extreme high-yield investments, where yields soar above 10% and fortunes are made or destroyed in months. The Invesco KBW Premium Yield Equity REIT ETF, KBWY, at 9.81% is just the gateway drug. Beyond it lie individual stocks yielding 12%, 15%, even 20%. Numbers so high they seem like typos. Donald's calculator shows the impossible. $20,000 at a 10% yield would generate $2,000 annually. That's $166 every single month, enough to cover his rent increase, tackle his debt, and maybe, just maybe, book that flight to Switzerland he's been dreaming about. But here's the brutal truth. These companies are one bad quarter away from slashing dividends to zero. Share prices can crater 50% overnight. Investors have lost everything chasing these yields. Donald's finger hovers over the buy button. $20,000. His entire life savings. The difference between financial freedom and financial ruin. One click could change everything. Part 7. Donald's nuclear option. Donald thought he'd reached the end, but there's one more weapon in the arsenal. One strategy so powerful, so leveraged, that it could multiply his returns, or obliterate his entire $20,000 in a single day. Welcome to options trading. This isn't about buying and holding anymore. This is about weaponizing time, volatility, and mathematical precision to extract money from the market like a surgeon. Donald discovers he can sell covered calls on dividend stocks he already owns, collecting premiums on top of dividends, double income from the same investment. The covered call strategy is seductive. Own 100 shares of Realty Income at $56 per share, then sell call options for $200 to $400 monthly premiums. That's an extra $2,400 to $4,800 annually on top of the $1,124 dividend income. Total potential. Over $6,000 yearly from his $20,000. But there's a darker side. Cash secured puts let Donald collect premiums while waiting to buy stocks at lower prices. The math is intoxicating, but the risk is absolute. One wrong move, one unexpected market crash, and Donald's $20,000 doesn't just disappear. He could owe thousands more. Donald stares at his screen. He's gone from conservative dividend investing to playing with financial dynamite. But now comes the real question. Can he actually quit his job and live completely off dividends? Or was this all just a fantasy? Donald's journey started with $20,000 and crushing financial pressure. But now, after working through conservative blue chips, strategic ETFs, high-yield REITs, dangerous dividend traps, and explosive options plays, he's ready to confront the ultimate question, can you actually live off dividends? The answer is yes, but only if you execute flawlessly. Let's run the brutal math. If Donald keeps reinvesting every dividend, keeps diversifying across all 7 strategies, and manages to save just $500 monthly from his accounting salary, that income snowball transforms into a financial avalanche. Say he builds his portfolio to $1 million with an average dividend yield of 6%. That's $60,000 annually in pure passive income. But here's the catch. It takes discipline, time, and nerves of steel. Donald must resist the urge to panic, sell during market crashes, avoid chasing yield traps, and stay consistent for years. If you've made it this far, I've got a powerful dividend guide designed just for you, and it's completely free. This guide includes a checklist to estimate your own payout potential, smart tips to boost your dividend income, and even a printable tracker so you can follow your progress as your portfolio grows. All you need to do is comment "dividends" on this video. Once we reach 50 comments, I'll share the link for everyone to download. So now you've seen the surprising payouts from $20,000 in stocks. But what if you could take it even further and build a portfolio that pays you almost every single day? In my next video, I'll reveal the ultimate guide to setting up almost daily dividends so your money works for you around the clock. Click over and learn how to create your own non-stop cash flow system.